Hi everyone, I'm Ken from Crypto Trading KS. Welcome, Masterclass students and CTKS students. We're going to go through a market pulse exercise. You want to assess how the market is moving, and crypto is the most risk-on market. It gives you incredible signals. We can see overall that the crypto market is just slightly down. We want to keep our eye out for inverters, and we can see that DeFi is throwing some really interesting signals at the current time. Moving across to chain, we can see Ethereum and Tron shining, and Tron often shines in the darkness. In blockchain infrastructure, Link, Anchor, and Band are coming up. In blockchain services, Render and TWT are doing very nicely. When you do market pulse analysis, you're looking broadly. You don't want to go into the charts that you're trading or investing in just now. You want to get a bit of an overall appreciation for what's going on. We can see Bitcoin coming down. Look at the path of Bitcoin. It's showing some negative price momentum. We're also getting a few cross unders here in terms of support. There's currently negative price pressure on Bitcoin. We'll look at the structural levels later and we'll see why that is actually the case. Looking at different time frames can be a little bit confusing. If you can see in the last 24 hours we had a bit of a downtrend. In the last 7 days we've done actually quite well. In the last 30 days we've done very well. There's support here, there's a lower low and there's a higher low here. If we were to draw a line between these two things, we can see support. There's a high and a high here. If we were to draw a line, imaginary line, through there, that is also support. I just want to keep that in your mind. These are the top 100 cryptos and the greatest gainers past 24 hours. Injective, BSV, Render, DYDX, HBAR, Chiliz, TWT, Rune, and Leo. The cryptos tend to move in groups. If you get a recovery, you'll tend to see the same names coming up around the same times. These groups can be very valuable to track, and that's why I do it each day. The greatest losers, top 100 past 24 hours, Conflux, IOTA, OKB, FraxShare, BAT, Tezos, LDO, IMX, and SHIB. You also get groups going down together. This is very good because the up together group and the down together group keep on tracking them. In the comments as part of your active learning, and you must always active learn because it really gets your mind to think about things. What groups do you notice going down first with Bitcoin and coming back up as Bitcoin comes up, or coming up as Bitcoin goes down? Those inverters are very valuable to track. It's a really good idea to keep your eyes on the liquidations, and we can see in the past 24 hours there's about 60 million worth of liquidations, just slightly more longs than shorts, but overall the market is pretty level. We look at the past 12 hours, past 4 hours. We're wanting to see how the colors change. If we go from the past 24 hours, we can see there was a lot of short liquidations on Bitcoin and also Ethereum, Solana. What does this actually mean? It means the price was pushed up. When we go to the past 12 hours, we can see so many long liquidations. That means the price was pushed down. What about the past 4? It's starting to even out a little bit, but the past hour has mainly been long liquidations, except for a couple of names. STPT is a really interesting one, and DYDX. They're good to keep your eye on. Think back to that 30-day chart when I said Bitcoin has experienced higher lows and is looking like it's crossing over. When you look at crypto fear and greed, this gives you an idea of the optimism or otherwise the pessimism inside the crypto market. And the crypto market is fantastic at measuring risk. You really need to look at it even if you're not trading or investing in it. Right now, the fear and greed index is just neutral. But we've seen a level of optimism increasing because Bitcoin's price has been increasing. With this downtrend, people get shaken out. They leave the market. Any positive day, they come flooding back in. Any negative day, they run for the hills. This kind of behavior you want to try to battle because it's exactly the opposite of what you need to be doing to get consistently profitable. Inside the CTKS Method service, what we actually do is to set up alerts. You can see Microsoft at major resistance, the US 10-year at market danger levels, and the US 10-year at extreme strength, and then at support. We need to look at the US 10-year today. Masterclass students, you get my live charts in TM6. We see this blue line in the background. What is that? Of course, it's Bitcoin. And what do we look at when we see this fear? This is on the daily basis. We can see the fear has been spiking up. When fear spikes up, the indices spike down. And of course, crypto does as well. All markets are intercorrelated and interconnected because they all measure risk. Every investor wants return. How do you get return? You need risk. And when we look at junk bonds, this is not a good sign. We're seeing junk bonds just decaying down. We don't want to see that. We want to see junk bonds turning around to support upward price momentum. At the moment, that very nasty sell-off in junk bonds is being felt in the bond market. Look at the bond futures, they're just plummeting as yields soar up. And remember, we were looking at the US 10-year and it was saying, I'm extremely overextended. And what does that actually mean? We'll look a little bit more deeply, but it's not good. We can also see that oil is coming up. Gold on geopolitical concerns is utterly rallying. Good on you, gold. Fantastic. Gold was a really slow starter because it encountered so much structural resistance and then just bolted. And we can also see that the DXY looks to be turning around. We're going to need to look at the structural levels on the DXY as well. Crypto Badger kindly shared Crypto Waves, and it is fantastic. Look at this. It's an RSI heat map. Yesterday, I saw some really good opportunities out there, and you will always see them anyway. They're in the greatest gainers and greatest losers. You can also look at crypto bubbles. When trading across the Tier 1, Tier 2 and Tier 3, you can focus the majority of your trading investment funds in those charts because you know where the structural levels are, but always have a percent for literally gambling. You want to chase high momentum, and the best way to do that is to see the ones that are coming up. And you want this uptrend. You see DYDX, we know that DYDX was one of the greatest gainers in the top 100. This is why I take you through so many things. You need to understand. Look at AGIX, an AI play. That's starting to come up as well. I really love this heat map. Crypto Badger, you are a legend. Before getting into the charts, pop across to ctksnews.com, click Market Analysis, and you'll get this, Key Macroeconomic Data Releases. What we saw recently, retail sales came in way hotter than anticipated. This has caused the yields to spike up. In response, the Fed is probably going to increase the federal funds rate. That's why the US 10-year and the US 2-year are going nuts at the current time. That's also why the DXY is playing up, going up. When we look at industrial production month on month and year on year, they're actually stronger than anticipated. So we have a stronger than anticipated consumer and a stronger than anticipated manufacturing base, which actually is interesting because the New York Empire State Manufacturing Index said exactly the opposite, and that caused a bit of a rally that was quickly squashed. What you want to do is to keep your eye on these high impact ones because they're high impact. We've got a lot of medium in here. Medium are okay to look at. It's like the Tier 2 and Tier 3. When you look at housing starts month on month, they expected 9.1%, they got 7%. So the housing market is softer than anticipated. That's a good thing, but the market's having none of it. We can also see that the building permits month on month are less, while actually they're more than anticipated. It's always fun to compare a negative to a negative. We've also seen building permits preliminary. They're actually more than anticipated. And what about housing starts? They're less than anticipated. That can give you a bit of context, but the idea, keep your eye on the high impact ones. When you're doing your market pulse, you're trying to understand the overall momentum and overall shifts inside the markets. And you're looking broadly, because if you don't look broadly, you're going to have your portfolio smashed. This is unfortunately just the way it is. The key is to look at those structural levels, but you must have background information first. And when we look at the next FOMC meeting on the 1st of November, look at this. This is incredible. One day ago, it was an 11.5% probability of a 25 basis point increase. And now it's been squished, literally squished, down to 0.8%. What does that mean? It means that the Fed has come out and said, hey, don't worry, we don't want to increase interest rates. It's not showing up in the economic data points. Remember, the market is very fast. It just encapsulates these data points very, very quickly. But this is showing us something incredibly important. The US 2-year, the US 10-year, the DXY should all start to lose momentum. You can see how important it is to do your market pulse. On the Market Analysis tab of ctksnews.com, just scroll down a little bit and you'll get all US stocks across all sectors. What do we see here? Tech got hit, everything got hit, but energy was the shining sector on the day. But the key right now is that federal funds rate data point. You want an overall context and understanding between high-risk crypto and lower-risk stock market. The stock market is very unforgiving. When the stock market comes down, it can take years to recover. Crypto is not like that. When it comes down, it's very forgiving. Things turn around very quickly. It can take weeks to turn around, but it's not years. And it always depends on how you manage your position as well. We can see the sector performance in the main market. All the sectors were down 1.34%, but we saw energy and consumer staples just shine. All of price moves in a wave, and when we look at extreme greed and extreme fear, we've bounced from extreme fear on October the 3rd, and we're coming up. This is a really, really good sign. If we were to draw an imaginary resistance line through here, and a very tight one, Masterclass students, you'll know exactly what I'm talking about. And of course, level 1 and level 2 certified, you will also definitely know what I'm talking about. We've already overcome resistance here. We're starting to turn around, but that doesn't mean that the prices just go up and up. We get pullbacks. It's often 2 steps forward, 1 step backwards. That's just the way of markets. When people are really new, they think the price just goes up and up and up and up, and if it comes down even just a little bit, it's going to zero. And so they panic. Panicking and emotion must be controlled inside financial markets, or it will devastate your portfolio. It's time to look at the key structural levels. We need to understand, what is the S&P 500 doing? What is the NASDAQ doing? And if you're a member of the monthly service, I would suggest that you look through all of the Tier 1 charts. You can do it pretty quickly, but the concept is, as an absolute minimum, do the Tier 1. If you're an exceptional student, do Tier 2 and Tier 3 as well. You'll form such an incredible picture on where the market is actually moving. It will be just like reading a crystal ball. It is literally that. In yesterday's video, I was explaining how the CTKS method does what no other methodology does inside technical analysis. It looks at all of price data, and it does so in a highly mathematical way. I was saying in yesterday's video that when you just look at recent indicative price, you can RIP your money because you simply don't know where the structural levels are. I said there was a structural level at 44.03, one at 43.72, 43.56 was the next one. If it's not going above, it's going below. And if it can't keep a level, it's going down to the next one. The beautiful thing with monthly service members on the CTKS Method service, you know exactly where the lower levels are and the higher levels as well, because you have this indicator. And that indicator is so powerful. It is incredibly valuable. These are not normal support and resistance lines. In this case, the S&P 500 has been marked up since 1871 with the CTKS method. That's literally 55,777 or 78 days. This is not a small markup. A lot of people just mark up a line. They just look at recent indicative price and they just draw one line or two lines. We don't do that. We do something completely different inside Level 1 and Level 2 standard certification. And as students, you know that. The key is, where was the S&P 500 going? We saw that it couldn't hold this structural level at 43.72, and you might remember from yesterday's video that was fairly strong. The fact that we lost it and it moved down to a level of support, I haven't changed this particular arrow, and couldn't hold it meant it was moving down to lower SLs. This is how price reacts to these SLs, or Stanfield levels. Stanfield levels are incredibly important to look at. They're not normal support and resistance. Normal support and resistance doesn't go back so far like that. What we've seen is this lower 43.56 level was taken out. The key is, where is the structure now? How strong is it? Is there a confluence of structure? These are the kind of things that you want to look when you overlay your indicator. It's really important to look at the S&P 500. It gives you a directional movement on crypto. And remember that crypto has been coming down, and we'll have a little bit of a look at the cross association between the stock market and crypto in a minute. One of the things to just take note of, when we turn the monthly service indicator on, it's going to reveal structural levels at 43.50, 43.25 and 43.14. Let's just turn it on and see what they are. Now we see something incredibly interesting. We saw that structural support level, when price was above, it's a support level. When price is below, it's a resistance level. But we're just pretending we were looking at this point in time. We saw that structural support level didn't hold. In fact, it was rejected. The lower one at 43.50 did hold for a time. It tried to get back above but failed. If it's not going above, it's going below. This one showed us that we were in trouble, and it was saying, I'm going down to 43.25, and that's exactly where it went. You often get retesting of these particular levels. You can see this one lost at 43.56. It came down to 43.50, a little bit below, and then it retested. It couldn't hold it, so it was coming down to the next one at 43.25, but it tried to come back and retest the 43.50. You can see it didn't quite make it. It's just a little bit below that line. But this is very, very common price behavior, something that you want to definitely keep your eye on. When we just go a little bit further, and remember, Market Pulse is all about understanding the market structure. And it's important, it's vitally important to understand this. If you don't understand where the structural levels are, you're just guessing. Because you can see these structural levels actually capture price. And when they fall through, they're looking for deeper and safer, more confluence, higher levels of probability on stronger support lines. And that's what we're coming into at 43.14. Price is always moving in a wave. When it comes down, people just get freaked out and they say, oh no, it's going to zero. The correct response, oh no, it's going to a Stanfield level. And how many of those SLs that does it price need to pass through before it can turn around? One thing that you'll note time and time again, when you come up to very strong Stanfield levels, what you will find is price tends to reverse from this. We could get a push up to 43.25. If the bears are still in control of the market, they'll try to push it down below 43.14. If the bulls can capture that momentum, especially if they can start liquidating the shorts on the other side of the trade, they'll push it up to 43.50 or even 43.56. The question therefore remains, what is the level underneath 43.14? If you've marked up your chart with Level 1 and Level 2 standard certification, which is available inside the masterclass or brought out as a separate thing inside ctksmethod.org, you already know. We'll look at it tomorrow. Yesterday, we looked at the Nasdaq and we saw the structural levels 13,623, 13,599 and 13,407. The question is, what actually happened to price structure? We saw that it came down. And as the S&P 500 goes, so too will the Nasdaq go. This is important to understand. If you're getting major negative momentum inside the S&P 500, it will transfer to the other major indices. The question now is, where are the support levels? Where are the structural levels? Okay, I'll release them. And also the level down. I'm a bit naughty with the S&P 500, but I really want you to put the time in. If you don't put the time in, you just won't get out of financial markets what you could. We can see that there's a structural level at 13,365. And look at this, 13,255 is a beautiful structural support level. In fact, it's so fantastic that the buyers have come in and they're supporting price already. What does this actually mean to us? We know that the S&P 500 is coming into support. The Nasdaq is coming in to support as well. And I mean big structural support. We're getting the probability of a structural bounce here. That will positively impact the markets and it will push crypto up. We've looked at the Nasdaq, we've looked at the S&P 500. It's important to look at DXY, Bitcoin, and total crypto market cap as well. When we just overlay the inverted DXY, which is this purple line, across Bitcoin, S&P 500, which is the candlestick pattern, and total crypto market cap, what we actually see is an incredible association, incredible directional correlation. We're now looking at the S&P 500 futures. The S&P or the SPX stops trading, but the S&P 500 is the futures. They're fantastic. They keep on trading. And what do we notice? It's starting to turn around. This is absolutely no surprise to us. We know what's going on. We're not like other people who guess. They say, I think it's coming down to here. My assertion, and I don't really know, is it's going to this point. The CTKS method has been designed to overcome those issues and reveal smart money buy and sell levels. When you look at this particular price action, you can see the S&P 500 came down pretty harshly, but it's at a strong structural buy level right now. The Nasdaq just a little bit away from it. It's showing that there's a confluence of smart money support levels here that shouldn't be ignored. We would expect at least a retracement, if not a break in trend. And we can see the Bitcoin and total crypto market cap has been pulled down with the S&P 500 and also the Nasdaq. A lot of people just look at crypto and say, oh, it's about the spot Bitcoin ETF, not ever realizing that all the markets are intercorrelated and interconnected. Yes, it does make a difference. Crypto is news sensitive to a degree, but that news cannot override cross correlations and cross interdependencies between the different financial markets. We've looked at the total market structural levels on the S&P 500 and the Nasdaq, that is the CTKS structure levels. We're going to look at Bitcoin, and we need to pay attention to what the US 10-year is doing as well. So let's quickly pop across to the 10-year. Yesterday, when we looked at the US 10-year yield, we were at this point. We can see what the US 10-year has done from there. It's moving in a wave for sure. When it moved up, it crushed the indices. It crushed crypto. When it moved down, the indices and crypto rallied. When it moved up, they've been impacted negatively. When it moved down, they were impacted positively. Now it's moving up. Is this a cross under in terms of trend? The question is, well, the answer is it better be, because the US 10-year yield is getting up to a level which is really, really dangerous for markets. CTKS Method monthly service members, I updated the US 10-year yield yesterday and released that indicator. Any time that you get a little bit of a flag on the side, you should pay attention to it and update your indicator, as is expressed inside the service videos. It's very important to understand where the structural resistance and structural support levels are. We had a lot of structural resistance levels around this particular area between 484.53 and 486.77. That was a really strong level, and we had a bit of a fresh air gap here as well. When we have a fresh air gap, price can move up very quickly, or the chart's value, in this case the yield, can move up very quickly, and it can move down very quickly because it doesn't have any intermittent support. What we've seen as well, this structural support area, this structural band, is starting to get taken out. If we see increase in the yields, and CTKS Method monthly service members, please make sure that you look at the updated indicator. There are some fresh air gaps, and they're in all the wrong places. One thing is going to be how the market reacts. If we get a perpetuation in the yields coming up, for example, if the US 10-year yield starts to come up, that could move up very quickly. You'll understand how quickly if you have the indicator. What we've seen with the very sizable drop in the probability of a rate increase, the yields have been doing their job. If the yields come up any more, they're going to start breaking the financial system. That's exactly why gold and the DXY has been rallying. Gold is an important one to look at. Yesterday, we just went through the structural levels, and we saw the 1955, 1944 and 1937 levels. There is currently a flight to safety inside the markets. I'm going to zoom in and show you that 1955 level. This indicator is of course available in the CTKS Method monthly service. As we look at how these structural resistance lines and structural support lines actually play out in price, you can see why the CTKS Method is the world's most powerful smart money buy and sell level detection system. If it's going above, it's going to the next one. If it makes it above, it's going to the next one. And that's exactly what it did, 1955. But you can see this incredible power. The sellers were just rife up there. There were so many sellers in gold that the probability of the gold price getting pushed down to a lower level was absolutely on the cards. But where would it be pushed down to? You've got it to the 1944 level. And you might say, Ken, but it went further than 1944. Yes, that's what price does. These are gravitational areas. They're not brick walls. But the concept is when you start to get these big, strong confluences in price, they can become brick walls. And you can see that brick wall starting to emerge now. What are we seeing in gold? If it can't get above, where's it going? It's going below. You can see just knowing where these structural levels are is an absolute game changer. It takes all the stress out. And remember that we talked about these levels in yesterday's video. Unlike other indicators, the CTKS Method actually tells you the guide rails of price. Not for today, for tomorrow. What we're doing with market pulse analysis is we're stacking probabilities, and we've stacked quite a few of them. We know where things are going at the moment. When we look inside Bitcoin's market structure through the CTKS Method, what I've done is I've popped on the indicator and I've drawn an SC or a Stanfield zone around all of these structural resistance levels. There's a barrage of them. That's exactly why Bitcoin's price action has had so much trouble getting through it. Of course, it's getting impacted by the movements of the S&P 500, the Nasdaq, and the yields. We also know that there's a structural support level at 28,426, and we've just turned that into a resistance level. But Bitcoin is holding up incredibly well because it's also a digital flight to safety. But the reason that it's not going nuts like gold is because there's so much structural overhead. And if you're looking through your Tier 2 and Tier 3 charts, CTKS Method monthly service members, you're seeing some patterns that are saying something very specific to you. It's not just Bitcoin. We cannot just mark up recent price action on Bitcoin because Bitcoin has been going for 5,097 days and counting. The concept is just to take a couple of days or even to take a year just obviates the fact that it's been going so much longer than that. That's why we need the CTKS method to draw in these structural levels. Also, when people use the word market structure, they're not referring to CTKS structure, they're referring to recent indicative price structure. I'm going to start bringing out educational videos on these topics. I think it'll help you a lot. You can see by knowing where the safety nets are and where the ceilings are is an absolute game changer. And there are 27 indicators, TradingView indicators, and 27 videos inside the CTKS method monthly service. Can you imagine looking through all 27 charts and just forming the jigsaw puzzle of price? You would be equivalent to these influencers out there. You can keep ahead of the news stories because price is always moving from CTKS structure to CTKS structural levels. There are so many different things that we can look at, and I'll be looking at different things tomorrow. But always look at your CTKS structure levels, and you can get those through your own hard work with level 1 and level 2 certification. And that's what I really recommend that you do. If you learn it once, you'll know it for a lifetime and you can apply it to any chart. Thank you for sharing this time together, and of course, thank you for everybody who watched yesterday's video and commented as well. There's some absolutely beautiful comments there. Kate and I appreciate you all so very much. And if you're new to the channel, please hit that like button and make sure that you subscribe. We cover things that no other community does. Having been inside financial markets for nearly 40 years, there are a lot of advantages that I can share with you that other people simply have not put in enough time to understand yet. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.